Good evening, ladies and gentlemen. This is Daniel representing PMS Bazaar. I welcome you all to the new season of Emkay Alpha Mavens. And in the first episode of this season, our guest speaker will share their insights on how new age fintechs are looking to disrupt the wealth management space. On behalf of the participants, I welcome our guest, Mr. Abhijit Bhave from Fisdom, Vikaas, Sachdeva, and Sachin Shah from Emkay Investment Managers. Before I hand over to them, let me give a quick introduction about the speakers. Abhijit Bhave is the CEO of Fisdom Private Wealth, the wealth management of Fisdom, with an overall experience of 25 years across BFSI spectrum in India, UAE, and Vietnam. He is an alumnus of IIM Lucknow and VJITI Mumbai. Prior to joining Fisdom, he has worked for global organizations like Deutsche Bank and HSBC, as well as Indian organizations such as ICICI Bank, Unit Trust of India, and Kavi Private Wealth. Warm welcome to you, sir. Vikaas M. Sachdeva, the Chief Executive Officer, Emkay Investment Managers Limited. Vikaas is an industry stalwart with over 2 decades of experience across marquee financial service organizations. Vikaas was the CEO of Edelweiss Asset Management Limited, the global CEO of Enam Asset Management Limited, one of the founding members of Birla Sun Life AMC, among others. His industry affiliations include a seat at the Mutual Fund Advisory Committee, and he was also on the board of AMFI, heading the ETF and indexing committee. Thanks for joining, Vikaas. Sachin Shah, a fund manager, Emkay Investment Managers Limited. Sachin is a seasoned fund manager with over 2 decades of experience in the Indian equity markets. Sachin realized the importance of governance early on and was instrumental in the development of equal risk and EIML proprietary module, which helps the company to evaluate and compare the listed companies on the various aspects of governance. And also, I would like to thank Finland Academy for their prize to the best questions, which will be announced end of the session. A bit about Finland Academy. Finland Academy is a training and investment education initiative. It is a research-driven, technology-oriented training and transaction organization focused on providing a dedicated education in training and investment-related subjects. So without further delay, I'm handing over the session to Vikaas and Sachin.
Thank you, Daniel. Thank you for the nice introduction. Good afternoon, everyone. It is indeed a pleasure to start off season 2 of Emkay Alpha Mavens with a new partner, PMS Bazaar. Very happy to partner with them. And I think we are already seeing this in terms of the registrations for the show. I believe there have been over 500 registrations to the show and a barrage of questions. So thank you, team PMS Bazaar, for enabling this. We may have a new partner, however, 2 things remain the same as always. These being our commitment to bringing you insightful senior management perspectives into various aspects of the wealth management industry, and my colleague Sachin Shah and myself having the privilege to host this show for you. Talking about the show, talking about the guest, Mr. Abhijit Bhave, let me, as always, bring forth the personal person behind the professional for you. It's indeed a pleasure. Sir, Abhijit, I have been talking to your friends, your colleagues, and I'm delighted to share some of the insights they're giving me about you. Well, I think one of the key things which people describe about you is you're a fighter to the core. Okay, you take up everything as a challenge. In fact, one of the things I've heard is that you've had a degenerative bone disease identified around 15 years back, wherein the doctors actually said you would have a little bit difficulty. In fact, you will find it difficult to have much physical activity. You took it up as a challenge and you become a fitness enthusiast. Today, in 2022, circa 2022, you're actually walking 10,000 steps a day. And on 26th of Jan, I believe you walked 26,000 steps to commemorate Republic Day. That's fabulous. At a personal level, I think I've been following your story, and I think a lot of people have been following your story on LinkedIn in terms of your fight back from COVID. I think some of the visuals which you put out there and the intensity of the struggle which you had has been quite inspiring. Abhijit is an avid omnivorous reader. On one hand, when I say omnivorous, because on one hand, he enjoys books on self-development and management, and is currently actually reading a book called Blitz Scaling, in case anybody wants to read it. And on the other hand, he enjoys fiction, his favorites being Jeffrey Archer. And in fact, I believe we have finished every single book of Jeffrey Archer. You're a follower of Sri Ravi Shankar. You have a lovely family. Your wife is into designing. Son is in class 8. And you also have a very sprightly cocker spaniel for a pet. I don't know how many people know that you've actually played cricket with Sachin Tendulkar. That's something, you know. And you love traveling across the world. And I think one of the things the audience will realize, as I have done whenever I've interacted with Abhijit, one of the great things about him is his unique ability to blend humor into every conversation. People talk about you as being a complete people's person. You remember every little thing about all your colleagues. One quirky thing about you, Abhijit, which I found very endearing, is that you love acronyms like 4T, 4C, SMART, which actually explains things much, much better. I think this is very interesting. You're a stickler for business etiquette. You can actually get, your colleagues have been telling me that you can actually get a little irked by people not being punctual, not being formally dressed for a business meeting, because you believe you're in the business of managing money. And whatever the client chooses to dress, we have to be dressed formally. Now you know why we are wearing suits on a Friday afternoon, right? So, to start off, let's get on to the question answer session. I'm going to hand over the baton to my colleague Sachin Shah to ask the first set of questions. A very warm welcome to you.
Thank you so much. Thank you so much. You know, you put me onto the proverbial chane ke ped pe. But you know, before Sachin starts, and I think you have not really studied too deep. In my school days, I used to do a lot of clubbing, but the clubbing was chess clubs. I used to be an avid chess player. In my school days, my claim to fame was my neighbor who was Akshay Kumar. And reading, I love. Yeah, you missed that part. I love reading, and I believe that a good reader is a good leader. And there's this movie coming called RRR, and I would say RRR stands for relearn, relearn, and relearn. And in fact, I took this book out. You know, should be the slogan of life. What got me anywhere won't get me anywhere else. You have to keep on relearning. This is a Marshall Goldsmith book. I don't think you can see it, but yeah. So yeah, thank you so much. Thank you so much, and thanks PMS Bazaar.
Thank you, Abhijit. Welcome to the show once again. And so I have known you for now more than, I guess, 6 years plus, or maybe 7 years, and I completely agree with what Vikaas said. The kind of the humor that you always get. In fact, the way you started this thing also speaks of that, and I love that part of yours. Let me tell you that. So really, I am so glad that I know you. You know, because I learn a lot from you every time I meet you. Thank you so much for being with us today. Just to kickstart our discussion today, I was just thinking if you can give a brief overview of Fisdom Private Wealth, because you are the new boy on the block, right? And if I can use the word, you are the disruptor, right? There are Goliaths, and you're going to disrupt them. I'm pretty sure about that. How do you plan to do that?
So Fisdom Private Wealth is a startup in a startup. You know, Fisdom is now quite an old company. We have been there for the last 6 years. It's been doing really well in terms of using technology and getting people across the length and the breadth of the country to invest. Fisdom Private Wealth started less than 6 months back. And, you know, we believe and we claim that we are not a wealth management company. We are a technology company in wealth management. And, you know, just to draw a parallel, I remember the first time, and you would remember the first time you rode an Uber or Ola. Now, Uber and Ola are tech companies, but we users got better cars, cleaner cars, air-conditioned cars, timely cars, and cheaper cars. Similarly, when Swiggy and Zomato came, we got food delivered from anywhere in the city at a lower cost with discounts, and it was client delight. What they also did was they expanded the market. People not using taxis are using taxis. People not doing online ordering are doing online ordering. So we are the Uber or the Swiggy of wealth management, and that is what we want to achieve. We want to add value to the client. We want to get clients what they possibly have not thought that they can get, and get that at a cheaper cost. You know, in economics, there's a term, Sachin, which is called ceteris paribus. Ceteris paribus means everything else remaining the same.
Yeah.
So for example, if I have decided I'm going to buy a particular Maruti Swift Desire, and I'm getting that car cheaper in some other place, I'll buy it from there. So we are saying ceteris paribus at lower cost, but why ceteris paribus? Why not better? So our objective is to try and offer what clients are not getting in wealth management, especially HNI wealth management, and also give it a cheaper cost.
That's an interesting point that you made, and that actually brings me on the other side of the table. So, like, suppose if I'm an HNI, as you said, that's your target audience, right? So, as an HNI, obviously I'm already having options or already working with some of the traditional private wealth management platforms or firms, right? So, as a fintech, right? But I still have a lot of problems, right, with my traditional wealth management firms, or the RM is changing, so many things, right? But how do you, as a fintech, how do you plan to address some of these challenges that I have today?
So since we started by discussing books, there's a very nice Simon Sinek book called Start with the Why. So
Okay.
you start a business, you start you do a startup, or you start a fintech kind of business trying to solve problems. So we have to first identify what are the problems that the clients are facing, or the clients don't even know that they are facing. So we have identified 4 such problems. In fact, I have shared a slide on that. We are calling it the 4 C's. So we're trying to resolve 4 C's for clients. Now let's and this will be a slightly longish answer. Sachin, please allow me there.
No, please. We are very happy to hear that. Yeah.
So correctness of advice. I had my first client buying a mutual fund in 1996. And since then I have seen clients and I've seen wealth managers, and every wealth manager wants to ensure correctness of advice. Now, how that happen? That happens through knowledge, through experience, that happens through research. Now, we all have that. But at that moment of truth, when I'm sitting in front of a client with 2 PMS products, which are possibly similar, at the back of my mind, I might start thinking, where am I getting higher commissions? Now, that fundamentally takes that correctness of advice away. So what we have done is we have the research, and we have wonderful research at Fisdom and Fisdom Private Wealth. We have people. So we are a new company. We are around 57 people. Between us, we have 750 years of wealth management experience. Wow. But what we have done is we have set no revenue targets. So once you take out revenue targets from the wealth manager, his priority will always remain the customer. So that's correctness of advice, and that I have never seen in any wealth management organization. Brilliant. Now let's come to cost. Now a lot of people are have been doing regular plans in mutual funds, and definitely in PMS and AIFs. There has been an AMFI campaign which talks about direct plans. What we are saying is, we are saying direct. We are also a proponent of passive investments. So we have actually done studies on passive, and where passive can be better than active. And this is a debate, but part of it passive. But let's talk of advisory. We are saying any client. So we start at an investment amount of 25 lakhs, but any client above 1 crore, we are saying advisory only. Advisory only, which means direct plans only. Now, direct plans, not just of mutual funds, but we are tying up with all manufacturing companies of PMS and AIFs, and trying to do direct plans for PMS and AIF too. And that is where the cost will drastically go down. And it's not about the cost. If I'm giving 100 rupees and I'm saving 1 or 2 rupees, I'm actually investing 1 or 2 rupees more. So compounding gives me higher return. So that is something clients may not even know, but we're trying to solve that problem for them. Now let's talk of convenience. Now, convenience is easy to understand when you talk of technology, but we are talking of a phygital model, physical and technology put together. So the client needs RM, he has RM. The client needs technology, he has technology. But still there are a lot of things today. Many years back, I remember Fisdom was the first organization which on the app allowed signature with a finger for mutual fund KYC. But we are working on a technological platform where PMS, which is what we all talk about today. PMS requires 30, 40, 50 physical signatures. Now that is not convenience by any standards. So we're working on something. It's coming soon where it will be only 1 wet signature. AIF, we're working on some technological output where there will be 0 wet signatures. So that to my mind is convenience, ease, speed, That's something that we are trying to solve. And lastly, control over the portfolio. We as a client, I would depend a lot on my advisor, but I also would want to do things without my advisor at different points of time. So in fintech, there's this phrase called democratization of information. So that is something, if you can't Google it, you'll have to still have it some way. So we are working on something. So one is simple, you have control. In fact, we had this television ads that came up a few months back where our tagline was, so Fisdom stands for financial wisdom, and our tagline was investments per power control. So control is, I'll give you an example. Anybody, I can bet this, anybody, including you and me today, if you go and buy a car, we will go to a car portal and we will compare cars for ourselves. We will not look at the agent saying, sir, ye gaadi le lo, wo gaadi le lo. So that is what we are trying to do, where it's again coming soon. We want to give a drop down to our clients, where across all mutual funds, all PMS products, all AIFs, all unit linked plans, they can actually do a drop down, compare for themselves and form their own opinion. And that is true control, whether you're buying or you're redeeming. So these are the four C's, the four problems that we are trying to solve in this new model of fintech in HNI wealth management.
Brilliant, Abhijit. And I must say that in my more than 2 decades of experience, see, everybody says, right, that we will give you the right advice, what is in your interest. But, making people walk the talk is the, as Vikaas always says, that's the moment of truth, right? And when you say you have no targets, that itself, you're really laying the foundation.
For revenue targets, because that is
revenue targets,
what actually takes the rightness away at some points of time.
Right. So you are really laying the foundation absolutely very right and very strong. And then the second part again, where you say that we want it to be 100% advisory model, where you want to really bring the PMS and the AIFs also under the direct plans. And I think that's brilliant, because to my mind, that's a win-win-win today, because I'm on the fund management side. And as a fund manager, when I know that when my performance pre-fees, to a significantly lower fees compared to what we are loading it today, it's a huge difference. And the investor would be so much better off, because the advisory fees is actually a fraction of that.
Yes.
And it's a complete win-win. So I think you've really well thought out this, and I really wish you all the best. And I truly mean that. I truly think this is really disruptive, and I think you will get a lot of success. Fantastic. Because over to you.
This was very engaging. I was listening to it. In fact, one of the things you mentioned when you were talking on this slide was the phygital model. That's pretty interesting. How does a phygital model, I'm just asking to elaborate a bit more on this. How does a phygital model add value to the investors? We keep hearing about pure tech or pure traditional sort of, methods of advice from a wealth management firm to a client. What is this phygital model? If you can just share a few insights onto that.
So many years back, Vikaas, I used to be a branch manager in a branch of HSBC. And that's, I think 20 years back. So that is where we started talking about, bricks and mortar banking and clicks banking. And we were trying to move the clients to internet banking by forcibly taking them to kiosks and saying, sir, net banking kar lo. Now, you also would have been, I have been on multiple panels on robo-advisory, where we have said, robo-advisory will really work in India. People in India want to meet their wealth manager. Now, a lot of things have changed post-COVID. All the digital transformation stuff that people used to write on whiteboards was forced onto us. So I think things have changed, but what we have is, as you mentioned, a phygital model. So we are, it's about, since you spoke about full forms and short forms, we have made this 4T framework. And there's a small slide we made because we want people to remember this. Otherwise, you tend to forget. Again, if you see from a client's perspective, he wants a talent. So, I met a HNI and I will not take anybody's name. And I asked him before I joined Fisdom, sir, you tell me, what do you expect from a wealth manager? And he says, I need two things. One is I want a wealth manager who does not have targets. and I want a wealth manager who knows more than me. So knowledge, wisdom, experience, that's talent. That's important. That's always required, especially when you're putting crores of rupees. Technology. That is where the fintech advantage is. So talent plus technology coming together. That's the phygital model with transparency. Transparency in what you're doing, that will get trust, because financial markets, investments is all based on trust. Now, today, if you look at any traditional player, though they will say that they are now going into technology applications, they will take time. At Fisdom, we have a 90-member tech team who are working on improving client
90? Sorry, you said 90?
90.
Wow.
90. That's Fisdom. They are looking at improving the client experience every single day. So that's real technology. Now, if you just take a normal technology company, I'll again not go into names, who actually want people to just come online on the app, transact and go away. Now, that is something HNI may not want. He wants to have the trust where he also wants to meet somebody. So, we had a client which we onboarded around 2 months back in a tier 2 city in Gujarat. And there we were there with another pure tech firm. But the client gave us his money only because he knew the RM for the last 8 years. So that is the combination. So new tech company plus talent, old traditional company plus technology, that is what will lead to trust. That is what we believe would be the benefit of a phygital model.
In fact, I'm just realizing that there are so many questions which have come in from the audience in terms of trust, in terms of robo-advisory, how can you impart trust? I think you've pretty much summed up the answer to most of these questions. So I guess the audience would realize that a lot of which they're talking about is being preempted and being taken care of by new age companies like yourselves. Talking about new age, I think this is one of the questions I've been wanting to ask you. You see, on one hand, we're seeing an increase in the wealth creation for millennials, as we call them, right? You said 20 years ago, you were a branch manager. So anybody born around that time would be a millennial, right? If I'm not wrong, right? 20, 25 years ago. But even today, and I say that with complete humility, majority of the wealth is held by 40, 50 years old, right? They are the quintessential HNI investors, which are around, which are your target audience, which are my target audience. Now, considering that you're talking about a phygital model, considering that you're talking about a digital dispensation, are these 40, 50 years old and above clients, are they tech savvy enough to, take care of this transformation and avail of these sort of insights which you're trying to give them?
Okay, so I am assuming that you are, it's a loaded question where you believe they are not. So I will tell you, and forget 40, 50. I'll beg to differ on both points. So I'll tell you something. My father is 86, touchwood, he's healthy, and he sits on his computer every day and Googles. He goes to LinkedIn and looks at people's profiles that tell him about. And for all you know, he might actually be watching this program. So it's not about the age. It's, as I said, it's about your learning. You learn, you enjoy, you use it. I know so many people who are above 55, 60 who book Ubers. And so that is one. Secondly, the average age of the HNI has rapidly gone down. When I was working in banking, in wealth management, most of our clients were 60 plus. Now, today, the HNI, we have this Novio rich people, these technocrats, and we meet HNIs who are, by the way, even 25, but 30, 35. So for us, the right client is 35 to 55, who is actually completely open to change. Who, it's not that others are not, as I told you, old people beyond that also like change, because now it's also forced upon them because of COVID. But these are the people who are creating more and more wealth, and they don't have what is something very important, which is time. And that's where actually technology helps. You can just use an app, use a web app, and do your transactions very fast. You can do a quick WhatsApp video call and do a transaction fast. So I don't think it's really about the age for technology usage. And I also think that the HNI is becoming younger in India, especially because we have the world's largest young earning population.
Debate a lot on this question, but I like your perspective. I think it's a great time to be alive. It's a great time to be in India right now. And I think the wealth creation which is happening are going to turn out a lot more HNIs across the entire age spectrum. And for 50 years old, 60 years old, if they are not tech savvy yet, I think your father's example should inspire a lot of people to start looking at things.
What you just said reminds me of our Prime Minister's speech last year on the Independence Day, where he quoted a poet who said, "Yahi samay hai, sahi samay hai." This is the time, this is the right time. I think we are in the right country, right industry, hopefully in the right organizations at the right time.
So,
you want to take it from here?
Yeah. So just couple of things before I come to the next question. So like Abhijit, what you're saying, so as I think even one of our earlier ministers mentioned, this is an idea whose time has come. And another very interesting point that you made, Abhijit, was is that you said your target audience is 35 to 55 HNI. So I was just thinking that I and Vikaas have now very few years to become eligible part of your target audience. If we don't create
about that yourself, Sachin, not about me.
If we don't create that wealth in the next few years, then we are out of that. So we are going to work hard. Anyways, see, another very interesting point that Abhijit you made was about you met an investor in a tier 2 town in Gujarat, right? And that brings up a very interesting point in the sense that if I see the mutual fund industry in the last 10 years, the kind of the SIP flows that we have seen, amazing steady flows, right? 10,000 crores, irrespective of the market, the kind of the maturity. I think a lot of creditors would go to because the way the mutual fund industry has gone in that B30 towns, the beyond 30, right? The beyond top 30, right? So, as a fintech, you also probably have that power to offer these wealth management products to investors, to people who have wealth, to manage their wealth beyond the tier 1 cities, right? Because tier 1, everybody has maybe 2-3 wealth managers. It's easily accessible, right? You call up a guy and they have an office, they'll come down to you. But beyond that, I think it's the fintech probably has some power to do this. Do you have any thoughts on this?
So before I go to that answer, you said something about SIPs and power. So that reminds me of a Bollywood movie dialogue, which I often quote to clients, by the way. There was a Shah Rukh Khan movie called Chennai Express, where he said that do not underestimate the power of the common man.
Yes.
And for me, the common man's power is SIP. When I used to be in UTI 25 years back, I used to say that the FIIs run the market. Now today, the SIP book is bigger than many FIIs. So absolutely, it's a changed world. Coming to your point on tier 2 cities, in the beginning, Daniel said, Sachin, you yourself, Vikaas, you are industry stalwarts yourself. And, you have met so many clients in so many cities. I love my job because I have been very lucky over so many years. I have been meeting very, very successful people across various cities and towns. And that makes me learn a lot. I remember, I'm just going to give you a few examples, a few anecdotes, actually. Maybe I'll tell you the names of cities also. Kolhapur, from Kolhapur in Maharashtra, if you do a 2-hour drive, you go to a much smaller town. That should be tier 3. And many years back, I met somebody there who had 58 cars. 58 cars. Wow. So there is wealth, and he told me he just bought his second chopper. So I don't know how many he has now. 4-hour drive from Delhi, there's Moradabad. And Moradabad has some very successful people. They have the largest exporters to Walmart of brass artifacts, and they have so much knowledge about US markets, and they have so much money. You go down south, a few hours from Chennai, there's Vellore, and there's Christian Medical College, and there are doctors who are very successful, who have been around the world and who are wealthy. There's another city actually in Maharashtra which was there in the newspapers for some years back because it had the largest sale of luxury cars.
Mercedes.
Aurangabad. So I had once gone to Aurangabad. I was addressing some 50 HNIs, and then I spoke to them after that 1-to-1. At least 30-35 from there were foreign educated. They came back to India. They set up their manufacturing units in MIDC there. So these are the people who have global connects. SMEs, SME across tier 2, tier 3. They know a lot of things. They don't need education on investments because they just know. Doctors across cities and towns, there are professionals. What they need is access. What they need is quick transaction, not just stocks and mutual funds, but PMS, AIFs, pre-IPO stocks, bonds, everything. I think that is where there is massive, massive potential. And if you solve the problem of access, give it a reasonable cost, then sky and Mars is the limit, and maybe beyond.
That's again, now I'm going to be a devil's advocate out here. You talked about access, right? And you talked about democratization, right? So clearly there's democratization of information, data, everything is available. Google it, and who's performing, who's not performing, why are they not performing. There are enough amount of comments, enough amount of reviews, previews, whatever you call it, right? Everything is there in black and white, virtually black and white, right? So then the investor, today, in fact, I had a call with one of my investors, and he tells me, you already bought these stocks. I know the names. I'll invest directly. Why should I be with you?
Yeah.
Right. So the question is that the information is there. Investors might think that we can just do it by ourselves, do it yourself, DIY, like it's an IKEA store. Your thoughts on this? That do they need us?
Yeah, this this reminded me of one of my bosses in HSBC who once told me about too much data and what he called analysis paralysis. So DIY, I will give you a simple example. I'll give a simple example. Suppose I have fever. I have 100 fever. I will just take a Crocin and I'll sleep off and hope that fever will go. But if I have 103 fever and I am getting vertigo and I'm getting a stomach pain, I will go to a doctor. We are financial doctors. If I am starting with a smaller amount and I'm enjoying doing it, I have the technology, I have the information across various channels. I can just do it myself, buying mutual funds or buying blue chip stocks. And I think Vikaas said this to me. We always say it's in Hindi, na, कि एक बार अगर मुंह जल गया दूध से तो हम छाछ भी फूक पे पीते हैं. I think the best way of learning is to fail. So I'm not saying you fail. I'm just saying that you do it yourself. If you love doing it, if you enjoy doing it, if the amounts are not really large, do it. If the amounts are large, I'll tell you, in this last week itself, I met a paint manufacturing SME company from Pune and another industrial coatings company in Noida. And these people, their passion is their work. They're engineers, they're manufacturing, they're creating wealth. Their time is important. The same time that they will spend in selecting a stock or a PMS or a mutual fund, they can spend that time in their manufacturing plant. They will enjoy it. They will create more wealth. That is where there is a need for somebody who is a subject matter expert, whom you can trust, who will be client centric, and who will help you achieve your financial goal. So it's some HNIs can do it yourself, but I think it's important that all of us have 24 hours. So we have to do things which we enjoy doing, we have to do things that add value and outsource some parts of our work.
Absolutely. I completely agree. I can't agree more with you, Abhijit. Thank you. Vikaas?
In fact, whenever I get this question, I've been getting this question for quite a few years from the mutual fund industry. When we used to publish our portfolios, we can buy the stocks. What is stopping us? Why should we pay you this fee and all of that? And I have been maintaining only one thing. I said, by all means, go and buy it. You should buy it. If you know the portfolio, you should buy it. But there is a left brain thing and a right brain thing to money management. Left brain is the data, right brain is the behavioral part of it. And that is why actually you pay us for it, right? But it's a very interesting question. And I think the argument will never die down.
Because one other important point that you always make, सस्ती चीज और अच्छी चीज में फर्क
होता है.
I like that thing always. I mean, not only for investors, but even when I have to, choose a few things when I'm deciding, that really always rings a bell.
Absolutely. I think we need to be more demanding, but we need to know the value and the difference between value and cost. But on that sasti and achhi cheez, I think that brings me to my next question, which is basically on the cost.
But sorry, just before that, what you said is right. Sasti, achhi, value and price, because I am a marketing grad also. What price you pay and what value you get. Sometimes I actually disagree on this part. Sometimes you get good things sasti also. Sasti does not mean cheap in value. Some cheap things in price, you are getting a massive discount on something which you really want for a long time. It can be value for money. Just a point. Sasti may not always be bad.
Uncanny, you are preempting my next question. So maybe you can add a bit more here. We talk about lower costs, okay, being a mode. But I believe that costs need not be cheap. They should be
Yes.
competitive. They should not be cheap. In fact, I think the key thing is that the cost should, at a particular cost, the investor should be seeing that you're adding value. And that is when, he will be more in tune in terms of subscribing to your services. What is your view on that?
So, uh, let me talk of the fintech industry itself and wealth tech. And since in the beginning you spoke about this book called Grid Scaling. That book actually studies the success stories of Amazon and Netflix and Uber, and it talks about nobody believed that Uber will make money, and nobody believed the market sizes. I think Professor Ashwath Damodaran had actually made a projection on the Uber market size, which nobody believed, but the actual market size came up 5 times. So we are talking of expanding the market. It's not just a mutual fund client. It is a stock broking client. It's a fixed deposit client. It's a person who has got money lying in cash, money lying in gold. There is no limit. So I will go back to the example of Uber and Ola and Swiggy and Zomato. Once I get used to a particular service, I like using that service. And it's going from beyond customer satisfaction to customer delight to me becoming a fan of that service. And then I do not mind paying. Today, clearly, I'm paying much more for my Uber ride than a normal Kali Pili. I'm paying delivery charges. I'm paying loyalty fees to Swiggy. So I think that is where it is. Uh, Here we give that value, and over a period of time, clients will definitely want to pay because they don't want to lose out on the service. But here the order is create the value, show the value, experience the value, and then start paying. And the profitability will come over a period of time because of volumes.
I'm now going to probably ask you to wear the hat of the tremendous amount of experience that you've had over the years, okay, and do some crystal ball gazing into the future. You've been talking about this to me in bits and pieces, and I think it's going to be extremely useful for the audience to understand from you how do you see the future of the wealth management industry? And as a corollary, I think the next question of mine would be: do you think that the traditional model which is there for wealth management that will become dormant, stroke extinct over a period of time? So one is the future of the wealth management industry, and the other one is the future of the traditional wealth management businesses.
So if you watch these sci-fi movies, they always say that the key to the future lies in the past. Have you heard this dialogue in movies? So I just wanted to, I had shared one slide on fintech, and I just wanted the audience to see this. It's a very heavy slide, but I'm just going to try and see it myself. Yeah, it's a very heavy slide, but it tells you which are the part of financial services where fintech has started playing a large part. If you look at the Indian context, fintech first came into payments, and today possibly I would prefer a Google Pay to internet banking to do my fund transfers. Lending, microfinance, that was the next step where fintech companies came in and started doing loan in minutes. And in fact, some companies like Bajaj also transformed themselves into a lendtech kind of solution. Insurance, we have seen companies like Policy Bazaar and Digit, and how their market shares are going up and people are saving money. Similarly, we have stock broking. It's a big example, especially in COVID, how it really deepened the market. And then we have retail wealth management companies, and now we believe that wealth tech in HNI is where the future lies. And if you look at the lower part of the slide, it talks about the full industry that's tech fin that will get created because of client facing fintech companies, and in the back end you'll have so many other industries. So it's a heavy slide, but I just thought I'll show that to people, but you can remove this. People also talk of first generation fintech companies and new generation fintech companies. So for me, the oldest technology company would actually be a ICICI Bank and iDirect. And today we have a Zerodha. So both are different. So, but there are companies which have transformed themselves into adding value and getting technology in. So for me, very clearly, fintech is the future. So if companies have to survive, but at the same time, the potential is so huge, so huge. We have just touched the tip of the iceberg, and it will be many, many times in the next 5 years, 10 years, 50 years, 15 years. So everybody has a role to play. But the larger ones, the more successful ones, the ones that serve more number of clients across more number of locations would be the fintech companies. Because that is where, as I said, it is always about the customer. And the client sees the value, those 4 C's are solved, they will tend to go more towards technology savvy companies, which will add more value.
Very interesting. Very interesting. Talking about science fiction, I'm sure you've heard of this one also, that science fiction is science fiction till the time science makes it fact.
Yeah.
So I think most of what you're talking about, sitting in your branch in HSBC 20 years ago would have looked like science fiction.
Yes.
But today it almost seems relevant. At the rate at which we are changing, it just looks like it's a matter of time more than anything else.
Yes. Yes.
Talking about time, I think it's almost 45 minutes since we've been discussing, and I think it's time now we just go to some audience questions. Now, I'd just like to tell the audience that we've got a lot of questions from you, and I think by and large, most of these have been covered. You're talking about old fintech versus new fintech. You're talking about penetration across beyond top tier cities, etc., etc. But there are some questions which I will still take up. I think on the question answer panel, there are a couple of them. Of course, one very interesting one, which I thought I was expecting this to come, and it did come. You talked about the model for Fisdom's business. What is the revenue model for Fisdom Private Wealth if the RMs are not having a revenue target? If it is not too confidential, if you don't mind sharing. This is from Indranil Sarkar.
So actually, Sachin told me that he learned something from me, but I'll tell you, I learned something from Sachin. Sachin will remember he had come to my office and we were discussing, I will not take the name of the company, discussing Lala ka hisab. And that has stayed with me. That is my learning from Sachin Shah, the fund manager. He said, Lala ka hisab kya hota hai? 100 rupees revenue, 30 rupees is the fixed cost, 30 rupees is the other variable cost or whatever. And 33 and 33 is my profit. मेरे को इतना प्रॉफिट मिलना चाहिए बिजनेस से. That is my way of running business. Sachin, you remember this?
Yeah. So 33 rupees employee cost.
Employee cost.
30, in a service business like ours, 33 rupees other overheads, 33 PBT.
Yeah. So I'm telling very clearly, our promoters Subramanya SV and Anand Dalmia are not running this company just to make it a valuable company. We want to make it a profitable company. But we are a very patient organization, and we want to see not just revenues but profits also over a period of time. So as I told you, we want so in the last 5 months, Vikaas and Sachin and Daniel, God has been kind and clients have been kind. We have acquired more than 825 clients in less than 6 months, and we have now touching assets under management advisory of around 1,000 crores. And that is where it is just started. And we are a small organization with a huge dream, and we are looking at having assets under advisory of 1 lakh crores in the next 3, 4, 5 years. Now, when that happens, clients give you that trust. One is, as I told you, clients will pay us advisory fees. And I'm very confident about that, because that is what has happened across the industry. And that is one place from where revenue will come in. But the point is that, as I said, it is just going to be a huge number of client base that is going to adopt fintech as a way of doing wealth management. And that is where we believe that we will get our revenues and a profitability also. And possibly with blessings from people like you and PMS Bazaar, maybe we'll have Fisdom PMS, maybe we'll have Fisdom Mutual Fund, maybe we'll have Fisdom Insurance. Time will tell.
Just stepping back from this question, and it's actually a more holistic question than what I just asked. Abhiram K.A. asked this question. He says that many new age players, and I'm just quoting what is written, many new age players are currently playing the loss leader strategy and not making money themselves. He believes this is not sustainable. How do you think they could start making money? Is lending / insurance broking the only practical way for them to make reasonable margins? I thought it was a very interesting question for for me to ask. Your views?
So I think it's a very important question. Thank you for this question. And I'm just going to take a slightly 1 minute extra. I remember once I had gone to Coimbatore as a part of CNBC IFA education program along with UTI Mutual Fund, and we had addressed this around 80 IFAs. And at that point of time, these loads have been taken away, and there was only trail commission. And they were all saying, now what tomorrow? Tomorrow, am I going to be only forced to sell insurance? I'm not saying insurance is a bad thing, but they have survived because markets have gone up, and clients have given them more money, and they have got used to a trail model. So similarly, that's the right answer. Some people will sell insurance, some people will do lending. By the way, the largest international banks in India who do wealth management get more revenues from lending than wealth management. So that is one. The other thing is possibly manufacturing products where because one is to have an open architecture where every product is welcome. But then once you have the client trusts your brand, then the client would also possibly invest money in your own manufactured products. So there are various ways that I can see today, but maybe a few days down the line, more ways will come. But unless it's a win-win, absolutely right. Nobody is going to keep on making losses and keep on adding value to customers. Then they'll have to start cutting corners. But we have a plan, and we have a very clear plan in terms of how we are going to be profitable over a long period of time. But customer first, and then shareholders.
I'm just going to run through them, but I have one specific question which I found interesting. I'm going to pause there. Gentleman called PP, I hope it's a gentleman or a lady called PP, asked, how do you see changes happening with the accredited investors coming in the market and availing services from PMS providers? I think it's early days. I'll just take the liberty of answering some
questions. You can answer that question better.
It's early days, but we are very excited about the potential. Pradeep Kumar has asked about how do you cover tier 2 and tier 3, which you answered. Rajesh Bhojani has asked about, do you think companies selling mutual fund direct plans in a big way are making money or will make money? Maybe I think this is something which people from the mutual fund industry will be able to talk about. But I think they are making money from a mutual fund point of view. From an advisor's point of view, how will you make money when you're selling mutual fund direct plans is what he's asking about. Rajesh Bhojani, you want to answer this question very quickly?
So we don't make any money. SEBI is very clear that you either do advisory or distribution. If you do advisory, you get zero commission. So we are very clear. So even if I sell a secondary market bond or unlisted stock, I will not charge commissions. I can't make money from those customers. So the only money that I can make is from the customers. Yeah, that's absolutely clear. So there's no money making possible in direct plans in that particular transaction with that client.
Interesting, because wherever this question comes in, I'm reminded of the fact that I was part of the mutual fund advisory committee when this direct plan regulation came in. So this always is a question which will come in. Sandeep,
you are the one, huh? You are the one.
Please. I will take credit if you want to give it to me. No, but I think it has revolutionized the way people think and people do. And there was some initial consternation which happened, but I think it's really changed the landscape of the market.
Yeah.
Sudeep Bukhanwala asked, due to fintech and increased digitalization, the role of an advisor will be abolished in the future? I don't think so. I think you've already answered this question in terms of trust, transparency, and the digital dispensation. Sachin, one of the questions which might be just for you, which is one of the perceptions of the investors is that the fund manager's charges are not linked to the gains of the investors. If the fund manager links his fee charges to the gains of the investor, probably the trust level will go up. I think this is already happening in the PMS and the AI industry.
So I think the question is probably more relevant to the mutual fund where it's probably more fixed fees only. But that is where the differentiation from the PMS and AIF is coming. At least at Emkay Investment Managers, we definitely have fee structures which can be completely linked to performance, both on the PMS and AIF side, or it could be a combination of a smaller fixed fee and a reasonable performance fee, or only performance fee with some hurdle rates. In fact, the Alpha Mavens strategy, which is where this whole thing is, we have come up with a product fee structure where we are saying that we will only charge a fee, only performance fees, but not only performance fees, but we'll charge it only end of 36 months. So we don't even charge yearly fees. So the idea is that because we've had some experiences in the past with so many investors in my last 2 decades of experience, where investors would say that the markets have already gone up 1 year, you made your fees, the next year it's already gone down. So I lost money, or I didn't make so much money, but you made your fees in the first year. So we are saying we take a full 3-year cycle. At the end of 36 months, whatever is the cumulative gains, we only charge fees on that. So I think we have already evolved to that platform where we say, which is MK's tagline, your success is our success.
Thanks for bringing that up. And so, Mr. A.V. Narayana,
Because
in
there
case
is
you want to invest there, please let us know. This was a question from him.
There's a question I want to answer. I think it's a very interesting question, if you don't mind.
Please,
Yeah,
please,
please,
Abhijit.
sir.
Because I think it's important. There is somebody who has mentioned about targets and incentives. Okay, one is saying how many employees we have. We have 57 employees at this point of time, but we will soon be 100. But somebody is saying without revenues, incentives, what is the motivation for the RM?
I saw that
So I
question.
can tell you something. So I'm a MBA Finance and Marketing, and I have done sales throughout my life. And sales is linked to targets, and satisfaction is linked to target achievements and motivation. I will tell you something I read in a book by Mr. Shiv Khera 25 years back. Motivation, the word motivation stands, you cut the word, it stands for motive plus action, motive for action. If I have a motive, I'll have action, and obviously I will be motivated to achieve that goal. So we don't have revenue targets. That does not mean we don't have targets. We have assets under management targets. And that does not mean we don't have incentives. We have attractive incentive plans because sales is about fixed pays and variable pay, and also possible the proverbial golden pot at the end of the rainbow, which is ESOPs. So wealth creation is possible, and absolutely not. We have fully charged high energy wealth managers who have targets, and who have beyond target, they have aspirations and dreams of creating a very large organization, where we keep on serving clients. But I'll tell you one thing, for wealth managers, just one thing I think is important. Our target should not be to achieve our goals or achieve our whatever our targets itself. I think we should take a slight helicopter view and position ourselves as helping our clients achieve their dreams and goals. Helping our clients achieve their dreams and goals. So, if you've gone to a gym, it's your trainer. If you have an elder sibling, it's your bade bhaiya, it's your brother, it's your friend, philosopher, guide. In this battle of life, we have to walk along with the customer on the path and help him or her achieve his various financial goals, which are linked to his life's dreams. Then motivation will happen.
Daniel and Pallav have told me very clearly, knowing the propensity of this discussion to go beyond 1 hour, that we have to stick to 1 hour. And in the interest of the 200 odd people which are there, I'm just going to run through some questions. I have 5 minutes. I will take 2 or 3 minutes. Any question you can pick up and answer, Abhijit.
I can pick up one question I think is important, just something we have not discussed at all. There's some question of Adil Murtuza about AI.
I was just coming to that. Yes, please.
So that is also the future.
Can I just read out the question for the sake
please.
of the audience? Yeah, it says, what is your take on artificial intelligence slowly overshadowing the decision-making capabilities of humans? If this comes into financial decision-making in a big way, then where does our model stand, which is a combination of wealth management and technology? Where does the model stand, which is a combination of wealth management and technology? And from a long-term perspective question, I think it's got several layers to it. But very quickly, if you could just answer this.
So I'll just answer it quickly and give you 2 or 3 small examples. Citibank. If you are a Citibank credit card customer, you will normally in the past have got your billing structure into this much money you spend on shopping for clothes, this much money you spend into shopping for electronics, and this much money you spend into shopping for shoes. Now that was customer behavior. Facebook used that classically to understand where the clients. So we became products for Facebook, and they said this is targeted marketing. So similarly, depending on investment patterns using artificial intelligence, one can actually predict, and it sounds again like a science movie, predict where somebody is going to invest next. And I think that is going to be one big future actionable in fintech companies. Not just, maybe it's also about structuring products. We have had in the past tech-led products which looked at covariance across stocks and that kind of stuff. So that is one part where AI can be used, but AI can be used on predictive customer behavior, investment behavior.
Abhijit, if it's okay with you, I think there are two questions which I liked.
Okay.
One was from Abhiram, which talked about many players currently playing the loss leader strategy, and the other one was, I think, just answered one Adil. So, with your permission, if I can suggest, I think Abhiram could probably get the best question thing. And I know it is an out of syllabus thing, but I think Adil's question also deserves something. So, I'm going to take the liberty of sending across this book, which you just talked about, blitz scaling.
Okay.
To Adil.
I have one more suggestion. This is another book.
No, that you sent to me. How come you didn't tell me about that? No.
This is the latest book I have read after blitzscaling. It's very nice.
Then why don't we do one thing? Let's do one thing. I think it will make a lot of sense because you're the guest. Why don't we just get a signed copy from you on the book which you love? I think it will make a great.
Someday I'll give a signed copy of my own book. I don't want to sign somebody else's book.
Yeah, a signed note is what I meant.
Okay.
I think this is a wonderful question. I think that brings us to the end of the session. There are still questions pouring in. 200 people odd have stayed through the entire session. So I think it's been a very invigorating experience. Thank you so much for all your insights. Time just flew past.
Yeah.
And Sachin, thank you for your questions. Dallin and Pallav, brilliant organization. I think the platform has been amazing. Any last few words, gentlemen?
No, thank you so much. I am very grateful to you, and I think it's lovely talking to you and talking to all the audience who had such interesting questions. Someday, soon, we'll have face-to-face interactions in a larger session.
Wonderful.
Thank you, Abhijit. And once again, a lot of learning from you. Thank you so much. Have a nice evening, everyone.
Thank you so much.
Thank you.
So participant, once again, thank you for joining us. Looking for hosting another insightful session. Wishing you happy and safe weekend. Thank you, everyone.